Hello, everybody, and welcome to the latest installment of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners redomesticate out of unfriendly legal and tax environments like Illinois to predictable pro entrepreneurship, pro growth states like Florida and Texas. Today, I am reviewing a recent report by Catherine Lowhead, writing for the Tax Foundation, entitled Testimony. Illinois Millionaires Tax, and that's in quotes, would hurt small businesses, exacerbate outmigration. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business tax and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Illinois is considering a state constitutional amendment that would impose a 3 percentage point surtax on individual income exceeding $1 million annually. The proposal, HJRCA 21, advanced out of the House Revenue and Finance Committee in April without a hearing. If adopted, the top marginal individual income tax rate in Illinois would rise from 4.95% to 7.95%. And just between you and me, I expect it to grow from there. For pass-through entities like subchapter S corporations, as well as most LLCs and partnerships, the rate would reach almost 10% when combined with the personal property replacement tax. That would give Illinois the 9th highest top marginal rate in the United States for pass-through businesses and the 2nd highest in the Midwest region. Now, the timing matters. Since 2020, 23 states have cut their top marginal individual income tax rates. The national median top rate has fallen from 5.4% to 4.7%. Now, that might not sound like much, but in the aggregate, it certainly is. Meanwhile, Illinois has not moved and is now talking about increasing their rates. 4 of its 5 neighboring states, Indiana, Iowa, Kentucky, and Missouri, have all enacted rate reductions, and each remains on a downward trajectory. Indiana specifically is scheduled to drop to 2.9%. Iowa is dropping to 3.5%. Kentucky actually has a mechanism in place to phase out its individual income tax altogether. Meanwhile, Missouri voters may get a chance to do the same this November. Illinois is moving in the opposite direction with all due haste, and it would be locking that direction into its constitution. Federal Internal Revenue Service migration data for 2022 to 2023, and by the way, those are the most recent years for which we have solid data, shows that Illinois experienced the 4th highest rate of population loss to other states via outmigration. The top destinations were Florida, Indiana, Texas, and Wisconsin. Now, 2 of those states impose no individual income tax. If Illinois raises its rate whilst its neighbors continue cutting theirs, any rational person can tell you that the outflow will accelerate. The proposal is framed as a tax on high earners, but the Tax Foundation's testimony to the Illinois House identifies a different reality. Nearly 73% of Illinois individual income tax filers reporting more than $1 million in annual adjusted gross income had pass-through business income on their returns. 65% of all pass-through business income in Illinois was earned by filers at or above that threshold. This is, in practice, a tax on small businesses. And the burden does not stay with the owners, it shifts to employees in the form of lower wages, fewer positions, and to consumers in the form of reduced competition and higher prices. For business owners operating pass-through entities with income sourced from Illinois, this proposal creates a decision point. Redomestication, which is the lesser known legal process of transferring a company's legal state of domicile without dissolving it, allows a business owner to move its home state to Florida or Texas while preserving its existing federal employer identification number, contracts, credit history, and bank accounts. Redomestication is a non-taxable event under the Federal Internal Revenue Code when performed in strict compliance with that code, as well as applicable Treasury regulations and the statutes of both the departing and destination states, including the preparation and execution of a legal plan of conversion. The company that exists after redomestication is the same legal entity that existed before. No new company is created and no company is dissolved. That is a key point. We are only changing the domicile of the company. I have to emphasize that point. Now, foreign entity registration, also referred to as foreign qualification, is often suggested by CPAs, and no disrespect to CPAs, I am a CPA myself, but it is not a substitute for redomestication because foreign entity registration keeps the company domiciled in Illinois and merely adds a second layer of compliance in the new state. The business continues to pay Illinois taxes on income sourced from that jurisdiction and file Illinois reports. So it is not a relocation strategy. It may be an expansion strategy, but it's not a tool for relocating a business to a new state. On the other hand, a traditional merger is also unsuitable in many cases because it creates a new entity, may require a new federal employer identification number, may trigger tax consequences, and often requires the renegotiation, novation, or assignment of contracts, as well as the closing and establishment of new bank accounts. Finally, dissolution should not enter the conversation at all because dissolution terminates the company. There is nothing left to move. For a business that continues operating, or I should say intends to continue operating, dissolution is not a relocation strategy. It is a liquidation event. Dissolution should only be on the table if the company's going out of business. If you have a tax advisor or attorney who is talking about dissolution in this context, run, do not walk out the door and get better advice. Now, if you own a pass-through business in Illinois, the window to act is before the constitutional amendment removes the legislature's ability to reverse course. As a footnote, I have personally assisted hundreds of business owners to redomesticate their entities, including many out of the land of Lincoln, all with a 100% success rate to date. If you have questions regarding potentially redomesticating your existing limited liability company or corporation, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific situation. Again, my name is Chad Cummings, and I hope that you found this information useful. As always, the information in this presentation is general in nature, and it is not legal advice because legal advice definitionally must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak with and perhaps even work with you very soon.